So hello everyone, welcome back to this channel. This is Selena US Talk and I am Selena. I'm gonna explain everything related to the US stocks and also the fundamentals, technicals, and the market sentiment of the US financial market. So before I get into the charts today, let's quickly talk about the broader market environment. Right now the market is still being driven by three major forces: interest rate expectations, the ongoing artificial intelligence boom, and global geopolitical uncertainty. Technology stocks remain the leaders of the market rally, especially companies that are closely tied to AI infrastructure and cloud computing. However, after such a strong run over the past months, many investors are beginning to ask whether the market could enter a short-term consolidation phase. That's why today we are going to focus on the technical side of the market and look at the three of the most important technology stocks: Nvidia, Apple, and Tesla. We'll break down the key support levels, resistance zones, and possible trading scenarios for each stock. So let's begin with Nvidia, which has been one of the most strongest companies and stocks in the market thanks to the massive demands for AI chips. Looking at the chart, the first thing we can notice is the overall trend structure. Nvidia is still clearly traded within a strong long-term uptrend, with higher highs and low, higher lows forming over time. The first important resistance level is the one the one I'm watching around 194, as you can see here. So we had this higher low and then it went up for an all-time high of 212 back in October, went lower again, then came back to 195, and then we came back to this level three more times. So I've been on this level for nearly 5 times right now, and now we're playing at 183. This level previously acted as a supply zone where sellers stepped in, and the stock struggled to break higher. If Nvidia manages to break above this level, 194, with strong volume, that would likely signal continuation of the bullish trend and could open the next door toward the next target around um 203 to 114 or even more. On the downside, the key support level I'm monitoring is 172 to 170. This level has historically acted as demand zone where buyers enter the market. So we have it on the first time here, second time, third time, fourth time, fifth, sixth, seventh, eighth, ninth, and then 10th here. So if the stock pulls back toward the support area and holds above it, it that could present a potential continuation pattern within the broader uptrend. However, if Nvidia breaks below 165, um, then we could see a deeper correction toward the next support area zone, near 145, for example. So overall, from a technical perspective, Nvidia still looks structurally bullish, but traders should watch carefully how price reacts around these major levels. So next, when we move into Apple, here, Apple. So compared to Nvidia, Apple's price action has been slightly more stable and less explosive, which is typical for a company of its size. When we look at the chart, Apple is currently trading within a range between 281 to 243, and this type of structure often signals a consolidation phase where the market is deciding its next direction. So the key resistance level here at 280. Uh, If the price breaks above this level, that could confirm a bullish breakout and potentially push the stock toward the next target around 288. So, if the price breaks above this level, on the other hand, the support zone could be around this area of 248. Okay, so the support zone around 248 is extremely important. If buyers continue defending this level, the stock could maintain its bullish structure. However, if Apple breaks below 244. Well, that would weaken the technical structure and could lead to a pullback toward the next major support near sorry near 222. Okay, so another important thing to watch for Apple is volume. Breakouts accompanied by strong volume tend to be much more reliable than those that occur during low liquidity periods. So last but not least, we'll be moving to Tesla. So today we'll only be discussing the big three ones in the group. So let's take a look at Tesla. Tesla is known for its volatility, and that volatility often creates strong technical setups for traders. Looking at the chart, Tesla has recently been moving within a broader trading range. The key resistance area I'm watching is around 470, okay? So this zone has acted as a strong barrier where price struggled to move higher multiple times. If Tesla breaks above this level, well, that could trigger a momentum move toward the next upside target near 503, the all-time high. However, Tesla also has a very important support level around 381. This level represents a key demand zone where buyers previously stepped in. If Tesla pulls back and holds above the support, it could form a higher low and potentially continue the bullish trend. But if the stock breaks up below 384, then the next downside target could be around 355. Because Tesla tends to move quickly, traders should also pay attention to overall market sentiment and news related to electric vehicles and technology development. So, to summarize everything we discussed today, Nvidia remains one of the strongest stocks in the market, but traders should watch for reactions around major resistance levels. Apple is currently moving within a consolidation range, and the next breakout direction will likely determine its short-term trend. Tesla remains the most volatile of the three stocks, which means it offers strong opportunities but also carries higher risk. As always, the key to technical analysis is not pretending the future with certainty, but preparing for different possible scenarios based on how price reacts at important levels. So that's all for today's technical analysis. Thank you to everyone who left questions in the comment section. I really appreciate the support and the discussions we have here on the channel. So if you enjoyed this video, don't forget to like and subscribe, and feel free to leave your questions or the stocks you want me to analyze in the next video. So thanks for watching, and I'll see you in the next market update.